One of the things that we would like to show is the after hours daily closing for the MMTs and the MMT school is that 4 down days in a row on the S&P. I'm sorry, S&P 500. Forgive me, we just did the Dow, but here is the S&P 4 down days in a row. And the old myth or the old saying is 5 down days in a row. A trend has changed, but we rather doubt that. I will show you more in depth here, MMT, as far as that bottom structure goes, is that this 2000 and bull trend has been very, very, very strong and really started back over here on the real breakout leg is 1300. Now, having said that, we are below the 10-day moving average, the 20-day simple moving average, and we're at an area where we broke up through resistance right here. This is resistance. We got above here with a big daily bar, and it took us right here to that first top. We had the pullback, and now we've had 4-day reversal from the original daily reversal on the S&P. S&P will have support. Once again, every bull has a pullback. Calendar 2012 earnings start tomorrow on 4/10. Google will be on Thursday. There's going to be a lot going on. The earnings are going to have to support this big bull run that we've had in this calendar year. So basically, every bull has a reversal, and bull behavior with bull breakouts have bull pullbacks. That's bull behavior in markets. And so when we're looking at these dailies with you, we're looking at where some of the key areas, and this is going to be that 1391 area where we had a high. Each high we made another high, and we came up and we challenged these highs on a daily, and we could not break them. That's, what the S&P should be doing. Okay, how far it will go is that the weekly S&P 500 is on the 10-week moving average. Unlike the Dow over here, it closed below its 10-week moving average, and the S&P has not caught up to it. Here's that blue line. That's the 10-week. That's bearish. Now let's go back to the S&P 500. And it's sitting on it. Now, if we break below it, we would sell down through it to this support line. That's going to be that 1350 area or somewhere right around in there. And we'll go more in depth. But we want to show that bull weekly rally, and it's been on fire with a 3-week, and we have covered 3 weeks in a row about bulls have pullbacks and regular bull type behavior outside of high frequency volume computing machines. You can see right here that this will come right up here. Let's bring it right through here because that's where it's going to come through. That's that area of that getting on the other side of this diagonal trend line. And if we sell down, we have weekly support levels where these narrow range weeks where that would come into play in the short term. That's about 1371 on the lower end of that weekly bar right here. MMTs, you'll be taught how to trade the options. But once again, every calendar bull year, at some point, they will have their pullbacks and they will create buying opportunities. Let it be known that you're going into earnings season and the top line and bottom line growth in the reporting session is going to have to be good for the S&P. So that means that the leaders in here, when they pull back, we made our price target, man. 1420 is what we had. And we got up here and we couldn't, and that's where that pullback was due. And that there would be a 2 to 4 week process for a correction to come so that people that do want to buy good quality at least can buy that first round of that bull pullback. That is the bearish reversal for the time being, and it's sitting on the 10-week moving average. And the 10-week moving average is 1380. We would like to see if there's a counter trend. We'll know tomorrow. If there's a sell through it, then we'll buy more put options and let it come down here and test. This is going to be the big weekly breakout bar right here, and half of that bar is 1329. And but this is where the rally started. Once it cleared that fourth week, that fifth big up week, is how we got to the top. Remember, every bull rally has to have it. and they have to have pullbacks, and you can short these pullbacks and actually make fairly decent money as they're working their overbought processes off. We've got a complete series for our MMTs that know that you would have to have that pullback and that bull rally that started here off of the financial crisis in 2011. That the bull has been in control all year except for when we got up here toward the highs, and it's going to take an earnings season to get it back above there. So we'll look for the lower support levels on the S&P using that weekly moving average for you new MMTs, not to mention that 4-day daily reversal. The 5th day down, it'll probably hit support right in here, and we will get net long off of that bottom.